and welcome back. Thank you very much. Hopefully, everyone out there can hear me. I'm going to say yes. Excellent. So we're live. I think that many of you might have missed that first section where Rodolfo was speaking about his experience. So we'll go ahead and sort of kick back off here where he'll walk us through a little bit of the work that they're doing at Pros of Venture so you get a better understanding of what's going on.
Thank you, Newton. Thanks for the intro, and happy to be here with you today and share a little bit more about Proesa Ventures. Let me share my screen just to walk you through a couple of slides that I prepared to give you a brief background on Proesa Ventures and who we are. First off, just Proesa, meaning prowess or fit. We're trying to really reshape the way mobility is being thought about around the world. And these are some of the key trends that we looked at and that inspired us to launch this mobility focus fund. Changing in mobility, there's a very different modes of transportation coming up. There's a very fast pace of innovation, a lot of talented people working in different solutions across the globe, and that's something that we really dug into to start our investment thesis. A lot of consumer behaviors as well are evolving. The urbanization of cities is becoming a big thing, and probably that's something that we're going to talk about as how COVID impacted that. And everything is on demand now. We're ordering everything online. So that's another key trend that we saw to launch the investment thesis. And finally, the increased environmental awareness. People are becoming more aware that they need to be more friendly towards the environment. There's regulations going on across the globe to push for electric vehicles and other technologies. So in general, I would say that these three key big themes inspire us to launch the fund. This is our manifesto for founders. We're taking a long-term view of things, even though right now we are in the middle of, like they say, crazy times, unprecedented times. We're taking the long-term view, and we still feel very optimistic and positive about the change that mobility is going through. We're becoming true partners for the founding teams, being authentic, empathic, and straightforward. Always putting the company front and center, and keeping a global perspective. Even though our team is based in the Americas, we are also looking at some opportunities to invest in Europe and Israel as well. And our key differentiators are that we are a 100% mobility focused fund, one of the few in the world. I'm going to get into that in a couple of slides. The platform, which I'll talk about as well, we're backed by a single LP, Grupo Proesa, which is a family-owned business based out of Monterrey, and all the networks and partnerships that we can bring along with that partner that we have behind us, and the corporate governance practices that we have developed ourselves and that the group has done pretty well in its 65-year history. So just a little bit about mobility-focused funds. There are a handful, well, probably a little bit more than a handful, but there aren't too many. And that's something that we noticed. I mean, other than the OEMs that are also doing their CVC efforts, right now we are the largest mobility-focused fund in Latin America. And our LP is Proesa, like I was saying, that owns four groups, four companies, the biggest one being Metalsa, which is a tier one automotive OEM provider. Here a little bit more, providing products for trucks and pickup trucks, mostly chassis and side rails for trucks. And the group has been in a constant innovation pace for the last years. And like 3 to 5 years ago, they wanted to be working closer with startups. They launched a company builder within Metalsa. We also have a playground in Metalsa that lets startups test and pilot their technologies at the plant level. And that's like the beginnings of the group. And then they decided like they wanted to be even closer to startups. And that's why we launched Proesa Ventures. The other company within the group is Citrufruit, which is in the agro-industrial space. It's a vertically integrated company that processes citrus fruits. We sell juice, oils, and other derivative products. And this is our definition of the mobility ecosystem. We are looking at everything from industrial tech, a little bit more tied to what our LP does, trying to look at 3D printing, noise and sound inspection, automation of processes at the plant level. and all the way up to digital data services around the mobility space, where we looked at everything from marketplaces, selling spare parts or tires, online travel agencies, user-based insurance, and a wide variety of business models that are coming up. A lot of shipping and logistics, which we'll talk about later on in our conversation as well. These are the five verticals that we invest in. Like I was saying, industrial tech. In the smart components, we're looking at components to make the vehicle electric and autonomous systems, and new vehicles as well. We have done and intend to do investments in hardware, but we got to be very careful about where we place our bets. We've looked at everything from kick scooter, e-bikes, and all the way up to Class 8 trucks, mobility as a service companies, and digital data services. As I was referring to. A little bit about our investment thesis. We are a Series A investors. This is a $50 million fund. We intend to make around 18 investments out of this first vehicle. We're writing checks between 500,000 and up to $2 million in first check, and reserving enough capital for follow-on investments. Our geographic focus is mostly in the Americas. I have to be honest about that. We are a very small team. There's three of us right now, two of them in Monterrey, and I'm based out of Houston. Before this all happened, we were on the plane every other week. Now that's not that possible. But we are still we're making a lot of connections in Europe and Israel, and have had a strong pipeline from companies from that part of the world. I would say probably around 20% of the companies we've looked at are from Europe and Israel. And this is our portfolio. Right now, we've been in existence for a year. We have made four investments, as you can see on the left side, and the group previously had invested in Autotech Ventures, another mobility-focused fund based out of the Bay Area, where we co-invested in Blue Dot with them. And the companies that we have invested in are Indigo Technologies, which is developing an in-wheel motor for a smaller kind of vehicle, like a 2 or 3 passenger vehicle. Neptune Scooters, which is a kick scooter company based out of the Bay Area as well. That company was brought to life from the MLab, the company builder that Metalsa had there. And then more recently, earlier this year, we invested in Exos, a company that is manufacturing electric delivery vehicles, step vans, based out of LA. And Blue Dot Technologies, which is a location-based company trying to improve make more contactless transactions and more seamless transactions for people going in the highways when you go through the toll booth, and also to quick service restaurants when you go through the drive-through. So that's a quick introduction of Presa Ventures, and happy to kick off the conversation.
Wow. Thank you so much for such a thorough introduction. Really appreciate you walking us through so much of the fun thesis, as well as giving us a taste into what you all define as mobility. I always like to start this question, or start the conversation about with investors, of sort of how did they end up defining mobility in the way that you've defined it. It seems that it's such a broad category that's so encompassing, and I know that you all have a little bit of have a geographical focus as well, so that makes it a little bit more limiting. But how did you all come to the definition of defining mobility, and what was that process like?
Yeah, so it was basically due to our LP having a strong presence in the industry with Metalsa, providing chassis and other structural components for vehicles. They want to keep adding more services and more products to be a higher value add supplier for automotive OEMs. And they first contacted me probably 2 years ago, and they told me, hey, we're thinking about this. We're thinking about launching a mobility focused fund. And at the time, I didn't talk about my background, but I was doing investments in healthcare and education for the most part. And I was like, okay, mobility. I've seen Bird, Lime, Uber. So there must be like 10, 20 companies in that space. Uh, and when we started digging a little bit deeper, we saw that it was a huge market, and we had a very hard time defining the thesis, because there are so many things going on in the mobility space, from everything in the manufacturing all the way to services. So it was a long process. I would say about for the first 6 months, it was doing a lot of research and trying to figure out what was going on out there in the market until we arrived to the investment thesis that I just presented. And I think the key here is that the group has been always very open to innovating and improving itself, and they have pushed uh, always they push their ideas to try to be more value add company, and that's I think that was a key to have the buy-in from everyone in the group and launch the fund. Also, something that I didn't mention is that we have an independent investment mandate, which means that even though we're backed by a single LP, we are not a CVC. We have an independent investment committee. We have our own investment decision process that is not tied to the group. So they're giving us full autonomy to invest beyond the core of the company of Metalsa, and that's why we're looking at many different technologies all over the place in mobility.
That's really an interesting process. I feel like as I have conversations with investors and even with entrepreneurs who are in the mobility space, there's always this talk about how exactly does one fit in that into the mobility space, and really understanding what where the opportunities are, and how can one take advantage of what's present today. So I think it's we've got a really good understanding of sort of where you all sit within mobility. But can you talk about sort of what's happening in Latin America around mobility, and maybe give the people on the call a little bit more insight as to why the focus on Latin America?
Sure. So I think first of all, I think that our focus in Latin America is just due to the fact that we are based in Monterrey in Mexico, and that's where we have our stronger network. And where we can be of more value add to the companies that we invest in. In the Americas, I think, well, let me take a step back. In mobility, I think the transportation issues are increasingly shaped by local decisions. And we've seen in Latin America more creativity in terms of coming up with novel solutions. We've seen a lot of founders taking ideas and concepts around the world and applying them to the reality of Mexico and Latin America. What generally speaking, and I don't want to I don't want to bucket
Yeah.
Latin America versus developing countries, but in Latin America, we've seen more services-oriented companies coming up, trying to move people around in a more efficient way, or a lot of shipping and logistics companies as well, trying to match shippers with carriers. In the US and in Europe, we've seen a little bit more of a product-based approach, founders developing new technologies around autonomous systems or electric vehicles. Not that they don't exist in Latin America, but just generally speaking, that's our experience thus far. And I think for founders elsewhere, other than in Latin America, they need to think about the realities of each of the cities that they want to enter in. In Mexico, for instance, around 60% of the population is unbanked, and that presents a whole new host of challenges. You have to think about the way in which people might be paying for the mobility services and their willingness and capacity to pay as well. So I think there are a lot of cultural elements, the geographic dispersion as well, the infrastructure in place, how the roads are in Mexico, and this is something funny that we talked to a company that was doing user-based insurance in the U.S. and they're doing basically driver behavior. And we told them if you want to apply the same algorithms to Mexico, you're going to punish all the drivers because they're trying to drive around potholes and other obstacles in the road that you don't have in the U.S. So that's not going to work. So those are like a very particular instances where founders need to think about the realities of the cities in developing countries like in Latin America.
I think that's you touch on a lot of really interesting points. I think that the point that you started off talking about hyper localization is really important. We tend to think of places as monoliths. We think of Europe, or we think of Asia, or we think about Latin America. But the reality on the ground is that the experience in each one of those places is very different. From rural to urban, and from relatively wealthy to poor. So there are definitely lots of different kinds of experiences that individuals have with respect to mobility in those locations. And you're right to say, entrepreneurs need to be cognizant of the ways that those things might be different. I'm curious to hear a little bit more about your take. I feel like Latin America for the last maybe 10 to 20 years has been sort of the background for mobility, or the background for tech from the United States, and because of the close proximity, there's been a rapid adoption of a lot of the technology that's come out of the Bay. Do you see that changing now that access to cloud computing and a lot of these technologies that were once more expensive and needed to be subsidized from Silicon Valley are now more readily accessible to people from all over the world? What's your take on that, and how that might be affecting what's happening in the service-based mobility that you talked about?
So I think in that sense, the evolution of technology is applying across the board. I think founders in Mexico, Latin America are also very technologically savvy. We've seen, I'm talking a little bit about our due diligence process. We really dig deep into the management team and into the founders. I know that probably every other fund says that, but being at an earlier stage, that's a key part of our decision-making process, because there aren't too many metrics that you can base off your investment off. So I think we really look deep into the team, and by this, what I'm trying to get at is that we will also be doing a lot of due diligence on the technical aspect of the founding teams in Latin America, and we've seen great talent there. I think people are, they're very well educated, that we have more talent coming up, which wasn't the case probably 10 years ago. But most of the companies in Latin America also are using cloud-based services and the top-of-the-art developing programs and languages. So I think in that sense, there isn't too much of a subsidy, you want to call it that way. I think we have very strong technical teams. Probably we're still a little bit behind San Francisco in the Bay Area, but that for us hasn't been a concern per se to do investments. I think that's something that can be worked on as long as there is a good starting base and you can build upon the different platforms.
That's really interesting to hear. I think you touch on a really good point. I think many people might not know that Mexico per capita is pumping out many more engineers than the United States is, or at least in the software space. And so there definitely is a deep well of talent there, as well as in other parts of Latin America. So I definitely agree. There's no shortage of talent. Thinking about what you talked about a little bit with due diligence, what are some of the companies that, or the kinds of products or companies that you all are looking to invest in or looking for at this current time, given the crisis?
So I think for us, the crisis hasn't changed that much our investment thesis. We truly believe that this is a transitory period, in the sense that the trends that were already there before this happened will continue after this is all said and done. Some of them might accelerate a little bit more, and some might take a step or two back, but they're gonna come back. I think this is a good opportunity right now for micromobility companies. There was a lot in that sector. There's going to be probably a lot of consolidation going on, and only the strong players are going to survive. But right now, I mean, we still need to see after the lockdown eases how consumers and people are going to behave once they return to a semi-normal life. I think what we're seeing in China is that people are staying away from mass transit, which is taking a big hit across the globe. That's a medium of transportation that is going to be impacted radically in the beginning. And people like in China and some other places, I was reading the other day, are going back to using the car, their private car, which is unfortunate for us as we were pushing for other modes of transportation that more efficient and more environmentally friendly. But I think that's not going to be a possible solution across the globe. Like, the cities are not prepared. Even if you take like 20 or 10% of the people that used to take the mass transit go back to their private cars, cities are going to break down. There's no enough capacity of streets to have enough throughput for people to move around in a single ride vehicle. So I think micromobility is really positioning itself right now, or could position itself. We've seen a huge boom on e-bikes, especially in Europe. And also cities around the globe are repurposing the streets and doing very low infrastructure investments as signaling and other things to make the streets walkable and for people to ride their bikes there and take other means of transportation to go to work, especially the people that are in the healthcare space attending the global pandemic. So I think there are a lot of opportunities there. Also in electric vehicles, I think that's going to depend on each geography, but in China, I think the push towards electric vehicles, it's there and it's going to continue stronger. In the US, it might take a step back. The administration is relaxing some of the regulations that were in place for emissions, so that's probably going to take a little bit to really hit the speed there. But yeah, I mean, and last mile logistics as well. I mean, this is something that has changed or accelerated radically with the pandemic. People are realizing that they can order everything online just with the push of a button. And we've seen a huge surge in volumes. I think UES published last week or a couple of weeks ago that in these 2 months, the percentage of online retail sales versus the store sales increased dramatically, all the way up to like 20%. Something that was expected to happen in the next 5 years, happened in the span of 2 months. So that's a trend that I think it's here to stay, and people are going to be using more of those services, and that's going to put a huge pressure on the supply chains. Also talking about supply chains, given all that's happened and the interruption of supply chains with the pandemic, companies are realizing that they need to be more locally sourced. So we're going to see a shift in sourcing supply chains more on a regional basis instead of a global basis, and probably just not having a just-in-time inventory, but having a little bit extra in case anything gets interrupted to be able to serve their customers. So there's a lot of changes going on at the micro level, and I would also say that at the macro level, I mean, if exaggerating a little bit, but if a working from home component and we say, okay, this is here to stay, which I don't think it's that easy to do, and especially in developing countries. But if we just for a moment think about that, then that's going to mean that probably the urbanization pace that we were seeing, it might stop, and people might live elsewhere, like in the suburbs or other cities that have been overlooked before. And that brings a whole new ballgame to the mobility space and to society in general. So I don't know, I think I rambled too much. I don't know if I answered your question.
No, it was good. You gave us
Ethan.
no, it was good. You gave us oversight over a lot of the macro trends that were in place before COVID, and obviously will continue after. I think for the purposes of Latin America, one of the things that I've been following are sort of 2 points that you talked about. The first being the micromobility trend, and then the second being last mile logistics and sort of supply chain. On the first, I'm very curious to hear about your take and the take of Proeza on the impact of micromobility in Latin America. I think in Europe we see a trend towards individual ownership of these types of items as opposed to sharing. And given the population, given the access to resources, both financial and also just infrastructure resources in these places, I'm curious to hear your take on where you see the market developing for micromobility in Latin America. Do you think that it'll be like Europe, where it'll take more of a individual ownership, or do you think shared models will prosper there?
Yeah. You broke off a little bit, but I think I got the gist of the overall question. I think there is a big opportunity for micromobility in Latin America as well. I think again, it depends on a city by city basis. We've seen cities like Bogota in Colombia really developing the infrastructure for bike lanes. They've been very open about that, and they've been pushing it for a few years now. In other cities, that hasn't been the case, but we saw when the scooter revolution came to Latin America, some of the U.S. or international players had a hard time getting to Mexico City. And I'm going to say something bad about Mexico, and I feel bad for saying it, but it's a reality. Like when these companies arrived to the city, they thought they were going to operate just like in every other city, and within the first month, I think they lost like 80% of their fleet. It was stolen, or it was damaged, or something happened to it, and so it's some sort of things that you need to think about. Again, like in the realities of each city that you go into. They have to develop like safer locks and GPS to track the scooters, and a wide variety of technological solutions to be able to keep track of their fleets. Most of the players left Mexico City. Some came back, and then you see companies like Green, which was started as a scooter company in Mexico City. It started growing very quickly throughout Latin America, merged with Yellow in Brazil, and they were recently acquired, but they had to scale back their growth because they were just trying to copy paste the blitz scaling model of the US companies, and the resources in Latin America are not that deep as in the US or other markets. So it was hard to keep that pace of growth, burning through that much capital. So they're going to have to take a more focused approach to growth. But having said that, I think there is a big opportunity for micromobility in e-bikes as well, and also in infrastructure, like a trend that we've been seeing, and that founders really need to work with the governments. That's a key piece of the puzzle. I know we all complain about our governments, and mostly in Latin America, we've suffered from that for decades now, probably since the beginning of time. But the government is a key component of every mobility solution, and more so for micromobility. I think all the founders need to be able to find their way to work with governments. I think right now they're more open and flexible to put in place more micromobility solutions. Mass transit is being impacted in a large scale, and also providing infrastructure for charging stations for the scooters and for the e-bikes. I think that's something that we saw in the U.S. and in Europe, that people were sick of seeing the kick scooters laying around on the sidewalks. And if you are able to bring a value proposition to the local government, that you have an organized way of putting the solution to work, they might be more open to let you work in that city, and see how you improve the lives of their residents in there. So like we were saying, it's all more local now, and you have to deal with the local players and bring a good value proposition for them in order to open the doors for new mobility solutions.
You like are sort of reading from my mind at this moment. I think I have a bit of an unpopular opinion about micromobility, and that I think that it does not really work until it falls under the purview of governments. And I think when we look at what sort of sparked the micromobility revolution, the last sort of 12 or 15 years, with the advent of the docked bike stations, where they really were kind of government-led or city-led initiatives that brought in private partners to be able to create a network, but we're ultimately the brainchild of city governments and city transportation agencies, and we saw how successful those were, and how they went through their struggles to get to a point in which they became sustainable. And I think that we'll see very similar things play out with our dockless cousins, where the bikes and scooters on the road will also need to become much more integrated with governments. And as you said, with coronavirus and governments facing pressure, and city transportation agencies facing pressure from the lack of public transportation use, then the needs for alternative options are quite large. We started this talking about the other trend as well that you were speaking about, which was last mile logistics. At the beginning of this conversation, you talked a little bit about how 60% of I think individuals in Mexico are unbanked, which provides a huge challenge when it comes to e-commerce, and especially in a situation like COVID, where many people are choosing not to go outside, and want to get access to delivery at home. What role do you see, I think, mobility, in quotations, playing in helping, one, to solve this issue of sort of financial interaction between offline and online, and then also in Latin America, sort of the pickup of people sort of dipping into the space and what this will mean for the e-commerce space in Latin America.
Yep. So yeah, I think we've been looking at a lot of last mile logistics companies in the last few months, and we've seen an uptick, very significant uptick in e-commerce transactions in Mexico and in Latin America, given this pandemic. So there's a lot of volumes, and I think of those volumes, many of the purchases are made from people that just tried it for the first time. So I think that has accelerated the adoption rate rather quickly in these last couple of months or 3 months now. Yeah, I think this is my 11th week that I'm in lockdown in my house. So I think that has accelerated the trend, and part of it is here to stay. I think we're going to see a higher adoption rate of people buying goods online. At the beginning, people were more hesitant because of credit card fraud. But now they're seeing that that's being mostly taken care of. It's harder to get your card stolen or used incorrectly. So people are taking a different approach to buying online. In terms of banking the population, I think that's still going to take some time. There are some new fintechs coming up in Latin America, neobanks, these challenger banks, that are trying to provide access to more a larger percentage of the population. We're still a long ways to go. But I think some other companies have been creative as to delivering against the cash payment. I mean, so that's another solution, which creates other problems. Like, then how do you make sure that the delivery guy really brings back the cash, and how much cash can they carry around without being robbed by someone else? So that creates other challenges, but that's something that the startups are working on to solve. But overall, I think this current situation is going to speed up the adoption rate of e-commerce throughout Latin America and throughout the world. And yeah, we've seen that in the companies that we've been talking to. They have record months in May, April, and March in terms of volumes of parcels that they're delivering.
That's really interesting. Do you think that there is opportunity, like we saw in Southeast Asia, for the mobility players to have a big role in sort of developing this financial understructure that supports e-commerce? We see that in Southeast Asia with Grab and with Gojek. Do you think there are opportunities for mobility to also play a similar role in the development of the underlying structures for the financial structures?
Yeah, I think there is. I think Rappi is trying to become that. They're like kind of following the playbook of those guys, and we've seen other companies trying to copycat Gojek and Grab there in Southeast Asia. But I don't know, at the same time, and I don't know if it's just me, I'm biased, but I think that there's an overwhelming number of e-wallets now and different methods of payment. I mean, I'm probably, this sounds bad. I mean, I'm more in a privileged situation. I have a credit card, I'm banked, but I don't know, like I use all these apps, and if each one of these apps starts having their own wallets and methods of payment, I don't know how that's going to play out. I mean, it still remains to be seen. I think there's a big opportunity, and obviously the largest player, the one that can add the most value to the customers, is the one that is going to be able to crack the code here.
Okay. So a bit of a change in topic. We talked a little bit about this and before about the role of sort of competition in Latin America in mobility around sort of the Didi Uber, or Didi versus Uber in various markets, sometimes head to head in Mexico, as we saw when they entered into the market in 2018, or Didi entered the market in 2018, and we saw it sort of indirectly with 99 in Brazil, with Didi investing in them and them going head to head. Do you see Latin America still kind of poised to be a battleground between sort of Chinese or tech from Asia versus tech from the United States? And do you are you what's your take on sort of the development of the ecosystem with respect to getting entrepreneurs ready to think more globally, and thinking about punching outside of maybe using Latin American technology in other parts of the world?
Yeah, I think one key thing to keep in mind is that we usually tend to think of Latin America as a single country, and that's not the case. I mean, for the most part, we speak the same language other than Brazil. We speak Portuguese, and it's a whole new different world. Like we are not looking at Brazil, for instance, because it's a very different ecosystem in there. But each of the countries in Latin America has very particular situations going on. And we saw this trend probably in the early 2000s or mid 2000s, where companies from Brazil that were gaining traction and were being capitalized substantially came to Mexico trying to conquer the market just by themselves. And they couldn't do it. Most of them failed. And that's because there are many cultural differences, and the way that you approach the customers and provide the solution or service, it might not be the same as you do in your home country. I think a shift that we're seeing is founders are more conscious about that, and they're partnering with local operations. So I think they're finding like the right local teams to help them open new markets, new cities, when they're launching in a different country. And I think that's one of the key things for startups to be successful. I think if a Chinese company or a US-based company tries to just with money come to Latin America and think that they're going to win the market, that's probably not going to be the case. They're going to hit the wall probably at some point. So they need to partner up with local players, be it through an acquisition or developing their own teams, or having some satellite offices. But I don't think that they just can land there and conquer the market just by being there. You know.
Yeah, that makes sense. So speaking of partnering with local partners, what's your view on this the saga between Corner Shop and Uber? And do you think that plays that there could be potential sort of antitrust issues with that acquisition? And maybe explain for those of the people who are online who are not familiar with Corner Shop and what they do, how they sort of fit into the mobility marketplace.
Okay. Yeah, sure. So Corner Shop is a grocery delivery company that was started by some Chilean founders, some Chilean entrepreneurs. They grew rapidly in Mexico. I've used it a lot of times. It's a great application, especially when I was coming back home from a trip. I ordered my groceries from the airport, and when I got to my place, they arrived like 30 minutes later, and everything was there when I got home. So they're doing a great job. They announced an acquisition by Walmart. I lose track of time,
Yeah,
probably like a year and a half ago.
2018, I think, was the year. Yeah.
And that one got canceled because of antitrust issues, as you mentioned. And then they announced the acquisition by Uber, probably 6 or 8 months ago.
Yeah, I think late 2019. Yeah.
Yeah, and it, it's funny. The local authorities in Mexico haven't decided. Well, they just did this week or last week, who was gonna be reviewing the deal. If it was the COFECE or another government body. They finally decided who's gonna oversee that acquisition. I think it should go through. I don't think it represents a market challenge or a monopoly in any way. I think there's the market is so fragmented, and there's so many ways to buy your groceries. I think online grocery shopping represents, I don't know, probably less than 5% of grocery shoppers. So it should go through, and unfortunately, it has taken a lot of time, which has affected the company. They haven't been able to develop or to speed up their deployment. The transaction hasn't closed, so they still have enough runway to continue operations, but this has definitely put a dent on their plans to accelerate their deployment, especially during these times. The people are ordering more online. They could have been helping more people, but it is what it is. They are working through this situation, and hopefully we'll have a resolution by the government in the next few weeks.
What's your and I think you're right. It provides a really good opportunity for a company like Corner Shop to have access to more capital to be able to grow more. And I think they're one of the few examples of, I think, technology companies that are born and bred in Latin America that are with global aspirations, already operating in Canada, and then thinking about opening operations in the United States. And so having a partnership with an organization like Uber would really push that forward, and I think in a lot of good ways. Speaking of that, do you think that there are sort of other spaces within the logistics? We sort of talked a little bit about grocery, but more on an industrial side, do you see there being a lot of innovation there, especially given the crisis and sort of the strain that's been put on those systems? Do you see entrepreneurs sort of coming up with novel ideas and ways to fix those problems that are existing within the Latin American logistical supply chain as well?
Yeah, and definitely not just in Latin America, but also in the US. That's a sector that we've been looking at very intensively for the last few months as well. I think, this pandemic only exacerbated the problem. Visibility. Shippers want to know where their loads are to avoid interruptions in their supply chains. And we've seen a lot of companies in Latin America, many of them out of Colombia, by the way, trying to create marketplaces connecting shippers and carriers to make logistics more efficient. And we've seen some other companies in the US, like digital freight forwarders, also trying to provide that matchmaking service, but also automating some of the processes involved in the whole supply chain, from the pickup of the goods to the loading of the truck, to tracking of the truck, to delivery of the goods at the end point. So there's been a lot of companies coming up there. I think in one of the challenges in Latin America is that most truck operators are very small. They usually have less than 10 trucks, 5 to 10 trucks, and they're micro entrepreneurs, and it's hard to have a consistent service offering. So that's something that they're struggling with, and also getting the trust of the shippers. They need to be very careful with the first few loads that they carry to really earn that trust, and as people are going to be very focused on having a very smooth and seamless supply chain and not being interrupted.
So we have about 10 minutes left. I think maybe it's time for some fun questions. I know we've been talking mostly about mobility, but you have a long career in the investing space, looking both at sort of, like you said, education and healthcare, but also looking at investments that had social impact. I know that it's always tough, but can you talk about some of the best deals that you've seen, either in the mobility space, but also sort of in your long history of looking at technology that affects people in their daily life? So what some of the best deals, and then maybe some of one of the worst deals that you've come across?
Well, you're putting me there in a tough spot. It's like asking a mom who her favorite kid is. I really liked all the investments that we've made, even if it didn't ended up being a successful investment. I think, hindsight is always good to have, but at the time, with the information that we had, probably they were all good bets, and probably bets that I would do again, because I think we bet in the right teams. So, and I think in the mobility space, since our fund is still pretty young, it's too early to tell. We've been, we just closed our few investments, but I'm very excited about the ones that we have closed, and we're about to close 2 or 3 more in the next few weeks. So I really like the way our portfolio is shaping up. And with my previous background, like you said, I was in impact investing, doing mostly healthcare and education investments. I think one of the key things was when we looked at impact investing, which there's always this confusion if it's philanthropy or not, and if it's subsidized capital, which is not. But I'm not going to get into that. It's a whole different conversation. One of the key things that we looked at was intentionality. So what's the intention of the founding team? Why are they setting out to do what they're doing? And that was key for us to identify if they're true to their values and putting their money where their mouth is. I'm going to tell you a funny story. We found this company that was providing meals for corporate employees and for plant employees, and they were doing really, really well. And when I met the founders, I asked them, so what's your vision of the business? Where are you taking this? And they told us, like, we want to grow it very quickly in the next 2 to 3 years, sell it for a bunch of money and retire and play golf in Acapulco. And I was like, okay, that's probably not an investment for us. That's not what we were looking for. And that's just a funny story, but what I'm trying to say is that the real intentions of the founders, like for instance, at Exos, we found that the team there that is manufacturing these electric vehicles for delivery vehicles, like for UPS, for Amazon, for the DHLs of the world, I mean, they're not doing that just because it's cool, but they really, I mean, they're from LA and they feel how bad the
smog
environment
is,
conditions are, and I forgot the word.
Like, smog.
The contamination is pretty bad, and so they set out to do or to start this company based off of that, and the fact that they had some previous experience in managing fleets. So, but that's the kind of founders that we are looking for. I mean, it's obviously okay to, and I mean, we are capitalists, right? We are in venture capital. It's obviously right to want to earn a lot of money. I mean, and that's a given. That's why we're investing in these companies. But also with a sense of purpose. So we cannot forget the why and the purpose of the company. And I think that's something that we're looking for in all the companies that we're looking at right now.
I think it's really interesting to come from a background sort of in social impact and then start working in mobility. Do you see there also being those ties amongst your founders of having some sort of greater ambition of really solving a problem? I think, when we look at Silicon Valley, oftentimes the narrative is, we're out to save the world by delivering fresh cookies to you in 5 minutes or less, right? Which is great because people love fresh cookies. But that maybe isn't actually that world changing. And so coming from a background in impact, do you feel like your experience there working with founders who were a bit more, mission oriented, did that help you work with founders who are now in the mobility space where there might be some parallels, or do you even see there being parallels between the work of mission-based founders and those who are thinking about mobility?
Yeah, to some extent. I think that there is. I think that the way that we are looking at it on a global sense, and that's the way that I used to look at it at my previous fund and here too. It's differentiating the products and services between painkillers and vitamins. So a painkiller is something that you really need and that the customers really need to have, and it would make their lives way easier. And a vitamin is something that it's more a nice to have. And that's how we are trying to differentiate and trying to solve or tackle the hardest problems in mobility. I mean, it's very arguable, and everyone has their own opinion on this, but at least that's one of the ways we're seeing it, and also making sure that the investments that we make are very tied up to our mission, which is to bring more safe and environmentally friendly and seamless services and products to the mobility space. So whenever we get a deal through the door, that's the first thing that we look at is our mission, which is there posted in our wall, and say, okay, how does this align to the mission? Because it's very easy to get caught up in the hype. Oh, this is really great. This flying taxi, that's going to be the next new thing, or this other service or product. But we want to be very focused and very disciplined about staying true to our mission, especially in the early innings of our fund. We want to be very diligent about that and be able to show our LP that why they trusted us with their money to do these investments with the thesis that we presented to them.
That is, I think, really, really great. I'm gonna definitely take that vitamins and and painkillers because I think it's really appropriate. Unfortunately, we are coming up on the end of time, so I want to really thank you for giving us an opportunity to sort of hear from you. Is there anything else that you want to share that you think might be important for entrepreneurs who are on the call listening to hear before we wrap up?
No, first of all, thank you, Newton, for inviting me and for having me in the show. I thought an hour was going to be too long, but it turned out to be very quick. We had a lot of material to talk to, and we still have plenty more to talk about. But thank you for having me. And overall, I would say that everything that we've learned about efficiently moving more people in as little space as possible has been turned on its head. But having said that, I think that the trends that were before COVID and post-COVID are going to continue there for the mobility space. There's going to be some consolidation. Obviously, some players are going to die in this process. I think there's also a lot of opportunities coming up. In every recession, there is great opportunities, and we truly believe that this is the case as well. We've seen with the little information that we have right now in these few weeks and months, that mass transit is gonna, people are gonna shun away from mass transit, and that's gonna open up a lot of opportunities for micromobility. People probably in the short term are gonna, if they have the capacity or the money to spend on a new car, they'll probably do that, which is gonna be a kind of a reversal from what we were seeing and pushing for. But that's gonna be like a temporary transition, I think. The trends, the big trends are still there. And I think even more so than now, some of these are going to be accelerated. I think autonomous technology is still going to be there. We're seeing this already at play at the warehouse level, and some delivery automated robots as well. So I think in certain niches, the autonomous technology is going to really speed up. Probably in the mobility of people, like robo taxis, that's still long ways in our view. We're still like 10 years away maybe, and OEMs are going to lower their spend to focus on their core business and probably not make so many new bets outside of their core, even though they already have a lot of sunk costs or sunk capital invested in these kind of companies. But we still see the investment to continue, especially targeting a few niches. And in electric vehicles as well, we see China is all in electric vehicles. In the US, we might see a step back, but we are very bullish on specific sectors like in fleets as well, like last mile fleets that can go back to their base every night and recharge, and in micromobility as well. In services, I don't know. We need to see how people react, how behaviors are going to change after this pandemic. In Latin America, we saw a lot of van pooling solutions or urban mobility solutions, trying to cater to corporates to bring people to work in a more efficient way and more cost-efficient way as well. People are probably going to be skeptical of riding with other people. But again, in Latin America, people don't have that many options. So people are not going to be buying another car. Yeah. And you see it right now. You see the subway system in Mexico City packed every single day. Example, as we are going through a hard period of time right now with COVID, but people have the need to move around. So that's not going to change. So I would just say keep at it. I think there's going to be a lot of opportunities, and there's going to be maybe a small slowdown in the next few months, but the trends are there, and the opportunities are there.
Wonderful. Well, thank you so much for joining us. Like I said, we really appreciate you. A huge shout out to the team at Cosmic Cat. We got Ben in the room, Thomas in the room, Martin in the room, who are really being helpful in making this broadcast happen. And really, really, again, thank you for your time and sharing your insight with us. With that said, we'll be wrapping this up. For everyone who joined in, thank you so much for joining us, and we'll definitely be looking forward to having you join us again on future conversations in future mobility.
Yeah, glad to do so, and thank you so much for having me again, and cheers to all the crew there in Germany.
All right, have a good one, and everyone have a good night.
Later. Talk soon.
All right, bye-bye.
Bye-bye.